All right, today's webinar is about getting ready for the next market crash, which will happen. It's a certainty. It just depends on whether it's in 1 year or 2 years. But crash we get, that is always the outcome of rising interest rates, which are the result of rising inflation. So we're going to learn how to protect ourselves from a coming crash today. We're going to go through short selling school, but also talk about making money in the meantime until Mr. Crash comes along. So this is John Thomas, the Mad Hedge Fund Trader, broadcasting to you live from Silicon Valley, California. And here it is a beautiful day, beautiful fall day with the temperatures falling. So take out your pen and paper to take notes or start typing into your smartphone. For what I'm about to tell you will blow you away and change your life. For I'm in the early retirement business, your early retirement. Learn what to buy, when to buy it, and why. How would you like to earn 350% with Vertex Pharmaceutical in 1 month? How about 394% with Palo Alto Networks in 2 months? 412% with JP Morgan in 3 months, 421% with Berkshire Hathaway in 4 months, and 811% with NVIDIA in 6 months. There is a legal way to do this in the options market, and we will teach you how. So why listen to me? Well, I do have 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, time out as a Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 16 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who's still working. And if you ever want to ride in a World War II fighter, I am your guy. So this is the election outcome. You lose the entire interest rate sectors of the market. We get earlier but higher stock market top, then an earlier recession, which will happen in 1 to 3 years, earlier stock and lower stock market crash, higher inflation, higher interest rates, much higher national debt, less regulations, which is great for brokers, money managers, banks, and crypto, less environmental control, extreme labor shortages at the minimum wage level, hitting agriculture, restaurants, and construction, and antitrust actions cease unless you're a big tech company. So here's the winners and losers in the stock market. Winners will be energy, especially nuclear energy, financials, banks and brokers, domestic manufacturing, crypto, Tesla, health insurance. The losers are all interest rate plays, all bonds, housing, real estate, construction, importers, and precious metals. And this is another reason to listen to me. 53.5%, 53.02% average annualized return for 16 years versus 26.16% for the S&P 500. We are running at more than double the S&P 500 profit rate, and that is set to continue. So don't believe me, though. Listen to one of my customers, and let's see how he's done.
Hi, my name's Wilson, and I've been with the Mad Hedge Fund Trader, John Thomas, since 2019. I caught the phenomenal returns in 2019 and 2020, somewhere in the order of the 80–90% returns on both of those years. I caught all of those trades, NVIDIA, the TLT, the Teslas, and so many more. And then in 2021, I started trading in some additional accounts, and I have caught almost all of those trades as well, and have been getting almost the entire returns that John has received. And it's been just fantastic.
Well, thank you very much, Wilson. And this is an unsolicited testimonial. He sent me his profit and loss statement, which you see ahead of you now. He then invited me out to lunch and then offered to give me a testimonial to use for this presentation. So what Wilson actually did, he bought call spreads. By call spreads allow you to greatly leverage up your holdings in the best performing stocks. And that's how he's getting returns of 482% for NVIDIA, 811 for NVIDIA, 421 for Berkshire Hathaway, 412 for JP Morgan, 394 for Palo Alto Networks, 350 for Vertex Pharmaceutical, 113% on silver, and 87% for JP Morgan. So this is our secret weapon, my Mad Hedge Market Timing Index. This morning it's 51, dead on neutral. Don't do anything. When it rises up towards 80, you want to be a big seller, taking profits on your position. When it drops down to the 20s, you want to be a big buyer and leverage up with leaps and call spreads. It is an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, momentum-driven indicators all day long. It took a team of mathematicians 1,000 hours of calculations to come up with these winners. So why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms become so dominant in the market, you should never trade without one. It does the research of a 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. This is 3 years of market timing index signals. And you can see we get lots of buys at market bottoms, sells at market tops, buy, sell, many round trips a year. It's like owning a money printing machine. I'm not the only one trading against algos. 80 to 90% of all current market volume is algorithm driven. This is the last 2 years of market timing index signals. And again, we are right here dead in the middle where you don't do anything. And often, usually doing nothing is the best thing. It's very rare that you get a sell-off so extreme you want to buy it, like here and here. And it's equally rare to see a top where you want to be taking profit. So use this as a great source of discipline and market timing. Why cover all asset classes like I do? Well, information about one asset class sheds light on all the others. For example, knowing what bond market is going to do and therefore interest rates is incredibly useful advantage when picking stocks. Some asset classes will be doing great while others are dead in the water. It will point you to where to trade the winners and avoid the losers. Give yourself every advantage. Know what is happening all the time, everywhere. There is a method to my madness. The election outcome will be a higher high now and then a lower low later. We simply flip from one type of risk to another. Start lining up your bear market plays now. Build shopping lists. All interest rate plays are looking at big sell-offs. Rising rates will take the US dollar to a new one-year high. Technology stocks are still attractive for the long term, but we have new headwinds for the short term. Energy rallies on deregulation, but oil isn't. The rally till January 20th inauguration day looks safe. After that, look out below. So what happens when the euphoria wears off? Time to become a bear market expert. So I'll give you 7 or so ways on how to play a falling stock market. For a start, there are a lot of bear ETFs out there. This particular one, the SDS, is one of the most commonly used. That is a 2x short bear ETF on the S&P 500. And if you look at the performance of all of these things in the July-September sell-off, you can check their tracking, check their accuracy to the downside, and it really is quite good. You can see the SDS peaked out here in May at 27 and made it all the way down to 20. So that's a 7-point sell-off, or roughly a 20% sell-off on a 10% decline in the S&P 500. So the tracking there actually is quite good. A great way to hedge your portfolio or just to make outright bearish bets. And if a 2x isn't good enough for you, look at the 3x short ETF, the SPXU. And again, the tracking is almost perfect. We peaked out here back here at 37, made it all the way down to 25. It dropped about a third. So again, your 3x is kicking in there. But these are trading vehicles, not long-term investment vehicles. So make sure you take profit quickly when you do catch some downside. You can also buy put options for the outright. And I'll give you a good example. If you buy the Apple 2025 200 puts at $202.44, you collect $100 for each dollar that Apple declines below 197.56, which is your break-even point. Or you make $1,000 for each $10 decline. And when we do enter a bear market, you can see there is plenty of downside, even in Apple, which hit a high of 227 a few months ago, almost beat that a couple weeks ago. We could go all the way down to like 160 or a decline of 20%. So, you know, $65 decline times $100 for each dollar, it can add up to quite a lot of money. And what you can do if you are a long-term Apple holder, like a lot of people are, you can keep your Apple stocks and buy puts against it and basically eliminate your downside risk for the short term. You can also sell short calls against your position. And again, we've been flatlining here since July in Apple at around the 200 to 230 level. If you sell the Apple 240 calls for $6.80 each, you collect $680 for each option as long as the stock stays below 240. And the game here is every time the stock rallies, like here, 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 and here, you sell the next month. So not only are you getting $6.80 on the decline, you get it for every single month you short those calls. So people who have been shorting calls against their Apple positions actually have done quite well over the last 6 months. You can also buy volatility or the VIX. And you can see here, we get enormous moves in the VIX when there's an increase in market volatility. You can see during the July sell-off, we went from a VIX of 12 to 55. That is one heck of a move. It then collapsed back down to 15, shot back up to 23. So again, VIX always rises in a falling market. If you own some VIX through the VXX, you can almost eliminate downside risk to an existing stock market portfolio, or you can make money outright. Approximately half of all the options trading in Chicago is in VIX trading. There's another way to play, and that is selling short recent initial public offerings. It turns out that initial public offerings in a bear market go down twice as fast as any other stock. That's because all of the owners of the stock are new owners, and they want to get out in a hurry. You know, they're hot hands, as they are referred to. You can do this by buying the Renaissance IPO ETF, the IPO, and you can see during our July sell-off, it went from 43 all the way down to 37. So Again, about a 15% decline, another way to protect your portfolio on the downside. How about momentum? What happens to momentum in a bear market? Well, momentum collapses. And there is a way to play that, the MTUM, and that's the iShares MSCI USA Momentum Factor. And in the July sell-off, we went from 200 all the way down to 166. And that again is about a 16% sell-off on a 10% correction in the S&P 500. Another way to protect yourself is beta. It turns out that beta also dies in a bear market. And beta is the relative movement over time of an individual stock, or in this case, the S&P 500. What did beta do during the last bear move? It collapsed from 91 all the way down to 76. So again, about a 17% decline from the collapse of beta in the correction. In a bear market where you get 20 to 50% declines in the S&P 500, you get much bigger moves. Okay, and there's one more to go here. You can actually invest in a hedge fund in a bear market, or you can short sell hedge funds, which tend to have a long-term bullish tilt. In this particular case, the HDGE went down from 21 to 18. So another way to protect yourself on the downside. So until the bear market starts, and that can be in 1, 2, or 3 years, depending how quickly inflation comes back and how quickly interest rates go up. Until then, there are going to be plenty of great trades to do on the long side. You want to get out of all interest rate plays like home builders, real estate, home repair, and then by that I mean Lowe's and Home Depot, precious metals and fixed income. You want to get out of your international commitments like defense and any exporters. If the U.S. withdraws support from Ukraine, that will kill the defense companies, which are making fortunes off of that right now. You also lose about 20,000 jobs immediately in Arizona and Florida, where the big factories for these weapons are. Also, if we withdraw from NATO, you're looking at much more prolonged declines in defense stocks. Oh, and by the way, if they want to cut the budget deficit by cutting defense, that has the same effect on all these defense stocks. So they're really looking at a trifecta of potential declines in defense stocks. What do you want to buy? Well, you want to buy deregulation plays like brokers, banks, money managers, and nuclear power plants. And you want to buy anything that benefits from antitrust elimination, like Goldman Sachs and Morgan Stanley. Mergers and acquisitions is the most profitable business that these people do. You make a few phone calls and you literally make $100 million. So how can you beat that? So again, we are heavily long brokers, banks, and money managers and nuclear plays through CCJ. The appointment of JFK as Health and Human Services Secretary has absolutely crushed pharma and biotech stocks. They could be entering a new dark age. You want to avoid those sectors. Morgan Stanley has reversed its bearish tilt. Used to be the biggest bear in the market. They just flipped on that this morning. They're now saying the S&P 500 will reach 6,500 and next year, and possibly as high as 7,400 in 2025. We have NVIDIA earnings out after the close. They'll probably be blockbuster again. But if the stock can't hold on to any gains, then that is forebodes poorly for all technology stocks. And of course, this time, what is unusual is we're going into NVIDIA earnings on top of a 10% correction, which has happened since last week. And investment guru Ron Barron got into Tesla at $10. He sees its stock at 1,200 in 5 years and 7,200 someday. So the election impact, money managers were more worried about the outcome, like 3 months of litigation, than who won. Decisive outcome, it's hugely market positive. Look for stocks to rally well into 2025. After 2025, we'll see what policies actually get executed. So let's go through a bunch of charts here and show some long-term trends. NASDAQ, it's all about the data, the new digital gold, and technology stocks will continue their bull run, but it will be more stock specific rather than monolithic, like we've had with the Magnificent Seven. We're looking for 25,000 in NASDAQ sometime in 2025. Tesla, we're looking for $500 next year. The stock has nearly doubled off of the summer lows, or actually the April lows, and we see it reaching $500 a share. We're running a triple long with our customers right now with Tesla, buy on dips, and that's me with the new Cybertruck. Microsoft, we see eventually grinding up to the upside. It may flatline for a while, but we should hit $500 a share sometime next year. And Meta, still one of the technology favorites. We see it hitting $700 a share sometime next year. And by the way, on the right, these are all aircraft which I've flown at air shows over the years. This particular one is a B-24 Liberator. Amazon, is really using AI to accelerate their business. Just hit a new all-time high. We're looking for $250 a share next year for Amazon, and that is a B-26 Marauder with a fearsome 8 50 caliber machine guns in the nose. Ouch! Would hate to get hit with one of those. NVIDIA, looking for 180 next year. They have a monopoly on the global high-end graphics card business, and it has been the top performer in the market for this year. And that is a P-51 Mustang fighter, which I often fly in Florida. Alphabet, another winner, knows everything you searched for the last 20 years. The antitrust risk is gone, and they are using AI to re-accelerate their business. And by the way, their Waymo robo-taxi business got expanded to Los Angeles last week and looks like it's about ready to go now national. That's a really old P-51A Mustang fighter, one of the first ones ever built, and that also is a great flyer. Google, again, looking, inverse head and shoulders right here, looking for new highs there. We're looking for $250 a share by 2025. And Palo Alto Networks, hacking never goes out of style. Buy on the dips. This has been a fantastic winner for us, and that is a B-25 Mitchell bomber, which was used to bomb Tokyo. Second half of the barbell, all about deregulation plays. This is the hot new sector in the market, and we've already had big jumps in these. This is a classic case where you chase the leaders. These are all chase stocks because they have really been going up all year, but accelerated their upside with the election passing. So JP Morgan is the quality, value, and deregulation play, are hugely overcapitalized, and they're moving into online banking and closing their expensive branch network. We're looking for $300 a share in JP Morgan. Berkshire Hathaway is the one-stop barbell stock with heavy exposure to Apple and financials. And they bought 25 billion of their own stock in 2023 and keep buying every dip. We're looking for $600 a share in Berkshire Hathaway next year. Goldman Sachs, big winner. They make it both on the M&A side and the deregulation side. You know, we're looking for $800 a share in 2025 for Goldman Sachs. Bond market, moving on to a new asset class. Bonds are toast. You can forget about bonds. Sell all the bonds you have. They will be losers. The deficit, national debt, is the big election loser. The national debt is expected to explode from 35 trillion to 45 trillion over the next 4 years. Interest payments on the national debt are already $1 trillion a year and will become the largest budget item. Government borrowing will become much more difficult than the last time Trump was president, when the deficit was only 27 trillion. All depends on inflation, which is likely to rise sharply in response to increased spending, tax cuts, labor shortages, and trade wars. Best case for bonds that we chop around here. Worst case, the TLT goes back to its low for the year at $82 a share. Avoid all TLT, junk bonds, Annaly Capital, and REITs. Another time will come, but that is not now. So let's look at the TLT, looking to retouch this low down here at $82 a share. Our target here is 82. The yields, that takes us from 5.8 back here down to 355 here in September. We're going back to 5% all the way back up here, and we could go as high as 550 on the TLT in 2025. Foreign currencies, the dollar is reborn. Nothing likes higher interest rates more than the US dollar, where the entire market is interest rate driven. We are about to become one of the highest yielding currencies in the world, and everybody is going to want to pour their money into the US dollar and the US in general. That means higher for longer interest rates, great for the US dollar. Don't sell the US dollar until interest rates start to fall. That's when the next recession happens. You want to avoid all the foreign currencies, the Australian dollar, the euro, the British pound, the Canadian dollar, and the yen. So this is the FXA getting slaughtered since the election. Emerging market currencies, weak. Euro, more weak. And the same is true for the other currencies. Energy and commodities is kind of a mixed bag with both winners and losers. Crude is now down on the year after a precipitous sell-off. You can blame a weak China, lost OPEC discipline, and overproduction by Iraq, and soon overproduction by the US because of deregulation. It is the worst performing asset class in the market this year. Oil production is at all-time highs. And guess what? We're about to subsidize an even bigger increase in production. We're now at 13.4 million barrels a day. We could hit 20 million barrels a day over the next 4 years. Unlimited new drilling and opening up of federal lands will crash oil prices. Big oil has become more productive as horizontal drilling and hydraulic fracturing become more advanced, and they also will increase profits from deregulation. So this is the long-term outlook for the price of oil. One of the greatest double tops of all time right here, 150 and then 120. After that, we see 10, but it may take 20 or 30 years to get there as the internal combustion engine disappears from the scene. Right now, cars account for about 50% of all the oil production or consumption in the US. And where is there an energy winner? That would be uranium. Cameco is the largest uranium producer in Canada. There is a global nuclear renaissance going on that will increase the demand for nuclear fuel. Why the supplies are decreasing. Russia just announced a total export ban on plutonium, and the world's largest producer, Kazakhstan, is also cutting production by 10% because of lack of access to processing facilities. Precious metals, great trade until now. It's game over. You need falling interest rates for gold to go up. And as a result, gold is down 8.3% since the election. Opportunity cost of owning gold is about to rise sharply. Gold is up 40% in a year, so it was ripe for profit taking anyway. 600 million in selling of gold ETFs happened last week. But it's not going to zero. Gold has become the only way the average Chinese can save, as they no longer speculate in real estate or copper and don't trust the Chinese yuan. So there is gold buying lower down. Also, central banks will continue to buy 693 million tons so far this year, or about $5.3 billion worth. Avoid all the gold plays for now. You can buy them much lower. Here's gold. You can see the election peak out very clearly right there. Barrick Gold getting crushed. And silver also being dragged down by the prospect of higher interest rates. So the harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why did dead people do so well? Because they never sell. You need a real pro to guide you through the market maze. 95% of the market can be completely ignored. There are a lot of great sectors and a lot of awful ones. You can earn a 10 times return on the great ones, but get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. 62.15% trailing 1-year return. That is our daily audited return. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast, and he occasionally lets me fly one. Greg turned $100,000 into $3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, Tesla power walls, and a Tesla Model 3, and still had enough money left to send 3 kids to college. Bob turned $500,000 into $27 million in just 2 years. Bob, let's hear how you did it.
This is Bob. I live near Denver, Colorado, and I'm hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
All right, so what do you do about all this? Well, stocks, you want to buy the next big dip. You want to sell short the next vol spike. Bonds, buy only the really biggest dips. Commodities, stand aside. Energy, stand aside. Currencies, you want to buy only the biggest dips in foreign currencies. Precious metals, the same. So if you were not up 62.15% in the past 12 months, as I was, you were reading the wrong newsletter or following the wrong trade mentoring service. 53.02% average annualized return for 16 years versus 26.16 for the S&P 500, except we do it with a lot less volatility. Notice that we either go sideways or up, sideways or up. We don't really have any big drawdowns. We stop out before that happens. Not so with the S&P 500, where you get these gigantic drawdowns here, here, and here. So you get those kind of numbers, you get to do things that other people can't do, like ride the Queen Mary in the owner's suite from New York to England. And once in England, you can take the Orient Express from London to Venice. This is the very long view, and this is where the big money will be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones, as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade that started last year. This is what happened the last time we had a demographic setup to one that's starting right now. From 1982 to 2000, the Dow went up 20 times in 18 years. Are you ready for a replay? Well, if you take 2009 as the bottom, we've already made it up to 44,000. And we only have less than one more triple to go to take us to 120,000 by 2030. And if you think I'm crazy, we're already 2/3 of the way there. Like I said, one more triple gets us over 120,000. Except this time it's different. We now have the AI tech turbocharger. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. The AI-based products and services are just starting to roll out. The development of functional quantum computers means that computational ability is about to increase a trillion-fold at no cost. The world's major computational challenges will shortly be solved. Needless to say, barbell stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. So who'll show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top trade performing service in the industry. Follow my research and market beating trade alerts, and you will rake the profits in. Let a Marine combat pilot steer you to single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. And this is a typical month for us. You can see I bought the S&P 500, made 16%, sold short treasuries, made 8.6, bought the Russell 2000, made 14%, bought Amazon, made 12%, bought Biogen, made 21%, and then we stopped out immediately. We stop out of losers very quickly. It's easier to dig yourself out of a small hole than a big one. And you can see every trade we made after that for the month made money. Just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up going into 2025. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. This is a typical trade alert that we sent out. Our algorithm predicted an upside breakout in NVIDIA. So we sent out a buy alert, and this is what it looks like. Buy NVIDIA at 480 or best. That's the pre-split price. Opening trade. And in this case, you need to buy 21 shares to get a $10,000 exposure. What happened? Well, NVIDIA went up 45% in just 22 days. Did we sit around and pat ourselves on the back? No. We put out another alert, said take profits. And in this case, we made $4,515 on a $10,000 investment in just 22 days. So this is a history of our Mad Hedge 10 baggers, stocks that went up 10 times after we recommended them. We recommended Zoom at $60. It went up 10 times. Lam Research went up 10.6 times. Square went up 25 times. Moderna went up 40 times. NVIDIA up 70 times. And of course, the granddaddy of them all, Tesla, went up 178 times after our $2.35 recommendation. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. With my Mad Hedge Global Trading Dispatch, you get instant trade alerts sent out at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you can consume in a lifetime, and access to a 16-year database on investment ideas, searchable by names and ticker symbols. And if you want the name of a good surfing camp in North Africa, I'll even tell you that. But watch out, it's a lot harder than it looks. This is the one-stop shop. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living, get the financial education of a lifetime. It's for smaller institutional and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. This is what you get. This is our global market comments in your inbox every morning, 5 days a week, telling you what to do and why to do it. You'll also get Mad Hedge hot tips, 5 most important things that happen today and what to do about them. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $12,000 for this service. That's what I charge my concierge clients who get my personal cell phone number so I can be their investment 911. And I'm not going to charge you $3,500. That's the full price of what I'm offering you on my website. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry running it cost me millions more. 6 months for just $997. That is a 71.5% discount to the website price. But it is a limited time offer only today through this webinar. We only take 25 new subscribers at a time, so we don't overwhelm the market with new trade alerts. It's first come, first serve. I can't wait to make you a top drawer trader. And just click on the link in the chat box on the right. And David, if you can put in that link, I would most appreciate it. And let's see what else happens. What are the questions we have here? Yeah, the link is in there. Yeah, here's a good question. John, throughout my many presentations this year, you were very bullish, and I felt it would be the case for years with all the money sitting out with money market funds. You sound like you've changed a great deal. What changed your view and other than election or perceptions from that election? The only change is the election. The fundamentals of the companies haven't changed. You know, the outcome of the election is that some companies will see their share price rate and other ones go through the roof. And I have to recall a famous quote by John Maynard Keynes, you know, when the market changes, I change. When the fundamentals change, I change. And if you don't, you're crazy. You'll lose money. We have a service that makes money in all market conditions, no matter who wins or loses elections. And I'm just continuing with that theme. So again, click on the chat box on the right if you want to get the discount offer that is only available today. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spots in your market. I can see the orders are already coming in. So if you're thinking about subscribing or just sitting on the fence, you better make a move because we're going to hit our 25 limit here pretty quickly. 6 months for just $997. Buy now and you will instantly receive a trade alert with an extremely high probability of success. Then you can execute immediately and make some of the most serious money in your life. don't leave good money on the table. 90% of these trade alerts make money. And just to give you a tease, this is the chart for the trade alert I'm about to send you. But you have to buy the service to find out if this is a buy or a sell. Buy now, and you'll also receive my free video course, Options Trading for Beginners. That is a 12-chapter course about everything you ever want to know about the options market for the basic beginner. All you have to know how to do is turn on your computer. Okay, so let me take a quick look at my store and see who has come in so I can thank them. And actually, there are quite a few names here. Let's see who we have. We have here Phil from Edina, Minnesota. Thank you very much, Phil. Check your inbox for the trade alert. Market's still open, so you can execute it right now and get a good price. We also have an order from Alan from Ontario, Canada. Thank you very much, Alan. If you don't find a trade alert in your inbox, look in your junk folder. If you're a brand new subscriber, sometimes that's where they go. And then we have another one here from Alan in Victoria, Canada. So thank you very much, Alan. Let me go to one more here. We have an order from David in Sonoma, California. Okay, if you're going to work with me for the next 6 months, best to find out who I am. My family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California, I lived the all-American childhood playing Little League Baseball and becoming an Eagle Scout. There wasn't much to do in rural California in those days except hunting, so I picked up a job as a paperboy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20, sold it at 30, and suddenly had found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I had visited more than 50 countries and spoke 4 languages. At UCLA, I majors in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions, where I learned how to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. And after 10 years of government service, I ended up with this box of medals, which I trot out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the continent all the way out to India. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund, and you can see this is my original ID card from Morgan Stanley in 1983. Unfortunately, the guy who signed off on my card was killed in 9/11. I was a pilot during a Desert Storm and also commanded a tank brigade for a short time. I rapidly became the top hedge fund manager of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, really has a big impact on your lifestyle. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There is far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account and turn it into $500,000, that is more job satisfaction than I could ever get anywhere. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans. I'm a major donor to Wounded Warriors. When wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. When you make millions of dollars for your customers, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built up his fleet to 16 flying aircraft, which they are worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed a brisk 250 miles per hour over the English countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitts, and it's easy to see how. We found a clear piece of sky over the white cliffs of Dover, between 2 big fluffy cumulus clouds, and commenced a full-on aerobatic flight test. Pilots always want to see what I can do with these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed the 1G limitation or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions of dollars for you as well, as I have done for thousands of other customers over the last 16 years. I look forward to working with all of you. And let me just quick check one more time. We have a bunch more orders pour in, and let me see who they are. We have one from Barbara in Oak Hill, Virginia. We have one from Phil. Let's see, Phil from somewhere. Let's see, Minnesota. We have another one. We have a Bill from Dallas, Texas. And let me move forward here. So 6 months for just $997. Okay, we have Mario from Kingwood, Texas. Adam from McCordsville, Indiana. Elizabeth from Amherst, Maine. We have Thomas from Burr Ridge, Illinois. And we have Vincent from Armagh, Ireland. All right, let's see. Any more questions? Let me check on the chat box here. And let's see. Here's a question. We've never done this before. Is this program suitable for the basic beginner? And the answer is absolutely yes. We literally have kids trading from dorm rooms with $500 who make a lot of money at this, and some of them can pay for their entire college education. So absolutely yes. And another question, is this an options only service? No. Every trade alert we send out gives you 3 choices: a stock, an ETF, or an options trade. That way you can tailor each trade to your own specific experience level and risk tolerance. Okay, we got more orders coming in through here. We have a David from West Cape, South Africa. Thank you very much, David. Check your inbox, get that trade alert done. Okay, let's see. We also have Stephen from Nair Warren, Victoria, Australia. Thank you very much. Promise to work hard for your money. And we have Richard from Grand Haven, Michigan, also coming in. Okay, let me see if we have any more questions here. Well, we have more orders. We only actually have 2 places left that we can sell today. So again, get off the fence, get your order in there. It's first come, first serve. The store automatically shuts off at 25. And I will answer questions until then. I'm thinking if I don't trade options, can I still use the service? Absolutely, yes. We also, every trade alert gives you your single stock and ETF options, or choices, I should say, not options. I'm thinking of buying your service after, does the price drive ask after 6 months? No. Once you buy, you are grandfathered for life. Although I do expect many price increases to come based on the performance. Another question here, can we talk to you directly? From Joseph in Portland. I spend part of every day talking to readers and looking for ways how to improve the service. You can email me anytime and I always answer the same day. Or you can talk to me in the chat box in the bi-weekly strategy sessions like this one.